The voice note came in at 11:47 on a Tuesday night. I was still at my desk, finishing a reconciliation report for a client, the kind of work that required silence and a second coffee. My phone buzzed. I saw it was my mother, and figured I'd listen in the morning. But something made me tap it anyway. Her voice was steady. Not angry steady, which was somehow worse. Maya, I've been talking to your brother and we've made a decision as a family. We don't need your involvement anymore. In anything. You've made it very clear that money matters more to you than we do, so we're going to move forward without you. Don't call us. We'll reach out when we're ready. 53 seconds. That was the whole thing. I set my phone face down on the desk. I looked at the reconciliation spreadsheet still open on my screen. Column by column, everything balanced, every number accounted for, every dollar traced back to a source. I thought, I wish people worked like spreadsheets. Then I opened my laptop, pulled up the business registry for Ontario, and started making calls. My name is Maya Okafor. I'm 34 years old. I'm a CPA with a mid-sized firm in Hamilton, and for the past 9 years, I have been the person my family called when they needed money. A signature, a reference, a plan, or someone to absorb the consequences of their decisions. My father died when I was 22. He had a small contracting business, some savings, and a life insurance policy that covered his debts, and left my mother with just enough to keep the house in Brampton if she was careful. She was not careful. Within 18 months, the savings were gone, and my younger brother, Dominic, who was 19 at the time, had already developed a talent for expensive hobbies and bad business ideas that he never paid for himself. I was the oldest. I had just started articling. I told myself it was temporary. That was the first lie I told myself. There were many more after it. By the time I passed my CPA exams, I was sending my mother $800 a month to cover the gap between her part-time retail income and her actual expenses. I told myself this was reasonable. She was getting older. The house needed repairs. Dominic was trying to figure things out. Dominic was always trying to figure things out. At 21, he wanted to start a food truck. I co-signed a small equipment loan, $14,000, because he had a plan, a menu, and genuine enthusiasm. And I believed in him. The food truck ran for 4 months. The loan took me 2 years to pay off after he stopped making payments, and the lender came to me. He said he was sorry. He said he'd learned a lot. He said the next one would be different. At 24, he wanted to open a phone repair kiosk in a mall. My mother called me and explained, in the warm and reasonable tone she used, specifically when she wanted something expensive, that Dominic just needed a small injection of capital to get started, and that he was more mature now. And that family supports family. I gave him $8,000 from my TFSA. The kiosk closed after 7 months. He said the mall traffic wasn't what it used to be. I stopped counting after a while. That was the second lie, pretending I'd stopped counting, when really I just stopped writing it down so I wouldn't have to see the total. The total, if you're wondering, was somewhere north of $60,000 over 9 years. Not including the month-to-month support to my mother. Not including the time I drove to Brampton at midnight because the furnace broke and the repair company wanted cash. Not including the birthday dinners I paid for every year because it was easier than the guilt trip if I suggested we split it. I told myself I was doing it because I loved them. That was true. But I also did it because I had been taught, very effectively, from a very young age, that love in our family looked like money flowing in one direction from me outward, and that any hesitation on my part was selfishness. 3 years ago, Dominic came to me with something different. Something that, for the first time, I actually thought might work. He wanted to open a small appliance repair shop, not a kiosk, not a truck, an actual storefront in a neighborhood in Mississauga that was dense with older homeowners who preferred repair over replacement. He had done research. He had a location in mind. He had pricing models and a projected break-even timeline that someone who wasn't a CPA might have found impressive. I looked at it carefully. I asked questions. He answered them. I pushed back on his revenue assumptions, and he didn't get defensive, he revised them. I thought, maybe he's actually grown up. The problem was financing. He had $15,000 of his own saved. The build-out and equipment for the shop required $90,000. He'd been to 2 banks and been declined both times because his credit history, a result of the food truck loan, among other things, wasn't strong enough to qualify without a co-signer. He asked me to be his guarantor on a $75,000 business loan. I said I needed 2 weeks to think about it. He said that was fair. During those 2 weeks, I did what I do for clients. I modeled scenarios. Best case, mid case, worst case. I stress tested the revenue projections. I researched the neighborhood, the competition, the average ticket price for appliance repair in the GTA. I also called a lawyer, a colleague, whose firm handles small business matters, and asked her what I should know before co-signing a business loan for a family member. She told me 3 things. First, that as guarantor, I would be fully liable if he defaulted. Second, that I should have a co-guarantor agreement in writing that outlined what recourse I had against him personally if I had to cover the loan. Third, that I should make sure I was the only person with authority over the business structure, because if he ever incorporated or brought in partners, my exposure could become complicated. I wrote all of this down. I had Dominic sign a private agreement before I went to the bank with him. My lawyer drafted it. It was 4 pages. He read every page, asked 2 questions, and signed without complaint. The loan was approved. The shop opened 11 months later. For the first year and a half, things were genuinely good. The shop was busy. He hired 1 part-time employee. He made his loan payments on time. I had set it up so that the payment confirmation was forwarded to me automatically each month, which he knew about and agreed to. He stopped asking me for money. My mother called me one evening just to talk, which she almost never did, and said she was proud of both of us. I cried a little after I hung up. I didn't tell anyone that. I thought we had finally found a way to be a family that worked. The email arrived on a Thursday morning in February. It was from the bank, a routine notification about a change to the business account linked to the loan I had guaranteed. I almost deleted it without reading because I assumed it was a standard update. Something made me open it. The notification said that a second signing authority had been added to the business account associated with Dominic's shop, effective 2 days prior. I read it twice. I didn't recognize the name. Tyler Beaumont. I sat at my desk for a moment and did what I always do when I need to think clearly. I opened a blank document and started writing down what I knew versus what I didn't know. What I knew was that someone named Tyler Beaumont had been added to the account linked to a $75,000 loan I was guaranteeing. What I didn't know was who he was, when this had been decided, or why I hadn't been consulted. I texted Dominic, "Can you call me when you get a chance? It's about the business account." He read it. I saw the read receipt. He didn't reply. I waited 2 hours, then called him directly. It rang through to voicemail. I called the bank and explained that I was the guarantor on the loan and had received a notification about a change to the account. The representative confirmed that a second signing authority had been added, but said she couldn't share further details about the account structure without the primary account holder present. I thanked her and hung up. Then I went to the Ontario Business Registry and searched Dominic's shop. What I found there was not a simple account update. 3 weeks before that email, Dominic had incorporated the shop, changing it from a sole proprietorship to a numbered corporation, and registered Tyler Beaumont as a 50% shareholder. He had done this without telling me, without consulting me, without apparently considering, or caring, that I was still on the hook for the loan that had made the entire business possible. I sat very still for a long time. When you work in accounting long enough, you develop a specific kind of calm in a crisis. Not because you don't feel things, but because you know that the window for clear action is short, and that emotion, while valid, is not useful in the first hour. I used that hour to call my lawyer. I told her what I'd found. She was quiet for a moment, then said, "Maya, this is a problem. Not for you, for him. If the loan was issued based on the business as a sole proprietorship, and he's changed the structure without notifying the lender, he may be in breach of the loan covenants. And you, as guarantor, have the right to request a reassessment." I asked her what I should do. She said, "Get everything in writing first. Then we talked to the bank. I called Dominic again that evening. This time, he picked up. He sounded slightly too casual. The kind of casual that people perform when they've been rehearsing how to sound natural. I said, I saw the registry update. Tell me about Tyler Beaumont. He said, oh, yeah. I was going to talk to you about that. He's an old friend, he knows the industry, and he's going to be helping grow the business. It's a good thing. I said, you incorporated without telling me. He said, it's still the same business, Maya. Nothing's really changed. I said, Dominic, I'm the guarantor on $75,000. Everything that happens with that business affects me directly. You know this. We talked about it. You signed an agreement. He said, I talked to a guy, and he said, adding a partner wouldn't affect the loan. I asked, what guy? He said, just someone who knows about business stuff. I asked, did you talk to the bank? He paused. Not yet. But I was going to. I said I needed him to send me everything, the incorporation documents, the shareholder agreement, everything related to Tyler Beaumont by the end of the week. He said, you're being really intense about this. I said, I'm being really precise about this. There's a difference. He said he'd send what he could. He sent nothing. I gave him 5 days. Then I sent a formal written request through my lawyer, citing the terms of our private agreement. He responded not to me, but through a text to my mother, who then called me in a tone I recognized immediately. The warm, reasonable tone. She said Dominic was stressed. She said Tyler was a good person who genuinely wanted to help grow the shop. She said I was making things harder than they needed to be by bringing lawyers into family business. She said she wished I could just trust my brother. I said, Mom, I have $75,000 of legal exposure. This isn't about trust. This is about the agreement we all agreed to. She said, you've always had to control everything. Ever since your father died, you've acted like you're the only adult in this family. I didn't respond to that. I had learned, over many years, that responding to that particular line of argument led nowhere productive. I said, I'm going to keep working through the proper channels. I hope Dominic will engage with this directly. She said, I hope you'll remember that we're a family. I said I remembered every day. 2 days after that call, my lawyer received a letter from a paralegal representing Dominic, claiming that the private agreement we'd signed was unenforceable, and that as a co-guarantor, I had no standing to demand documentation about the business structure. My lawyer called me. I could hear a very particular kind of professional amusement in her voice. She said, he hired a paralegal. Not even a lawyer. A paralegal. I said, what do we do? She said, we write to the bank. We wrote to the bank. We outlined the loan covenants, the change in business structure, the incorporation without lender notification, and my position as guarantor who had not been consulted. We requested a formal review of the loan status and attached the registry documents as evidence. The bank's commercial lending team responded within 4 business days. They had, as my lawyer predicted, a clause in the loan agreement requiring notification of material changes to the business structure. Incorporation and addition of a 50% shareholder qualified as material. They were placing the loan under review and requesting a meeting with the primary account holder. The night before that meeting, my mother sent the voice note. Don't call us. We'll reach out when we're ready. I listened to it once. Then I went back to my spreadsheet. I want to tell you what I felt in that moment, because I think people assume that when something like this happens, the feeling is anger, or grief, or some dramatic collapse. What I felt was very quiet. It was the specific quiet of a person who has been waiting for something for a long time and has finally, without ceremony, received it. Not what they hoped for, what they already knew was coming. For 9 years, I had told myself that if I just kept giving, kept being reliable, kept being the one who showed up, eventually the people I loved would see that I was worth treating with basic honesty, that the relationship would balance out, that the giving would be recognized. What I understood, listening to that voice note, was that the relationship had already balanced out, just not in the way I'd meant. The balance was, I gave, they took, and when I asked for transparency, I became the problem. I wasn't angry. I was clear. I opened my email and sent 3 things. First, I forwarded the bank's review notification to my lawyer with a note. Please confirm my liability position if I withdraw the guarantee at this stage. Second, I sent a message to the bank's commercial lending contact directly, formally requesting to be removed as guarantor, given the material breach of the loan covenants by the primary account holder. Third, and this one I wrote carefully, I sent a message to Dominic, copied to my lawyer. I told him that I had requested removal as guarantor, that the bank was conducting a review, and that any further communication from him should go through proper channels. I told him that I hoped the business could continue in some form, but that I was no longer in a position to carry liability for decisions I wasn't informed about. I didn't threaten. I didn't lecture. I didn't explain why I was hurt or ask him to understand my position. I just stated facts and closed the loop. Then I turned off my phone, finished the reconciliation report, and went to bed. I turned my phone back on the next morning at 7:15. There were 31 missed calls from my mother, 11 texts from Dominic, ranging in tone from confused to frustrated to, by the end, something that read like panic. 2 emails from the paralegal with language about legal consequences that my actual lawyer later described as creative fiction. 1 text from an unknown number that turned out to be Tyler Beaumont, informing me that I was messing up a good thing. I read all of it. I responded to none of it. My lawyer called at 9. She said the bank had been in contact. They were proceeding with the formal review. The removal of a guarantor mid-loan was not simple, but given the documented covenant breach and the circumstances, they were open to the process. It would take several weeks. She also said, "Maya, your brother is going to have a hard time really financing this without you. He may lose the shop." I said, "I know." She said, "Are you okay with that?" I thought about it honestly. Not the version of the answer I was supposed to give. Not the version that made me sound like a good person, but the real one. I said, "I didn't make those decisions. I tried to prevent this outcome for months. At some point, I'm not responsible for consequences I warned someone about." She said, "That's correct. Legally, and, if I can say so." 3 weeks passed. My mother called once during that time from a number I didn't recognize. I think she borrowed a neighbor's phone. When I picked up and heard her voice, I said, calmly, that I wasn't in a position to discuss the situation informally, and that if she had concerns, she could have someone reach out to my lawyer. She hung up. Dominic sent a long text around day 16. It started with frustration, moved into explanation. Tyler had seemed like a solid partner. The incorporation was supposed to make things more official. He hadn't realized it would trigger the bank, and ended with something that was almost an apology. "I should have talked to you first. I know that. I read it 3 times. I believed that he meant it, in the way that people mean things after the consequences have arrived. I also knew that meaning it after the fact was not the same as having thought about me before the fact." I replied once, "I appreciate you saying that. I hope things work out for you." I didn't say more than that, because there wasn't more to say that would have helped either of us. The bank completed their review. Given the covenant breach, they issued a formal demand for loan restructuring. Without a guarantor and without a creditworthy co-signer to replace me, Dominic could not meet the restructuring requirements. He negotiated a repayment arrangement and sold his share back to Tyler Beaumont, who, it turned out, had been quietly positioning for exactly this outcome, which is a whole separate story that I am not part of and do not intend to become part of. My name was removed from the guarantee. My lawyer sent me the confirmation on a Friday afternoon. I was at my desk. I read the email. Then I sat for a moment and thought about my father, who used to say that the measure of a person wasn't what they built but what they protected. He usually meant family when he said it, but I think, if he had lived long enough to see all of this, he might have agreed that sometimes what you need to protect is yourself. I'm still in Hamilton. I still work the same job. I send my mother nothing now, not out of anger, but because I have finally understood that support given without boundaries isn't generosity. It's a payment plan on a relationship that was never going to become what I hoped. She hasn't reached out since the neighbor's phone call. I don't know if that will change. I've stopped trying to predict what my family will do, because I spent 9 years doing that, and it cost me time, money, and more importantly, the habit of trusting my own judgment. I've had a lot of time to think about why it took me so long to get here. I'm a CPA. I assess risk professionally. I help clients make clear-eyed decisions about money and liability every single week. And yet, I signed my name to $75,000 worth of exposure for a man whose prior track record included 2 failed businesses that I'd already absorbed the cost of. The honest answer is that being competent at work doesn't protect you from being conditioned at home. I was taught, very early, that the way I proved I loved my family was by giving them things: money, time, energy, my professional reputation. And I was taught that any hesitation to give was a moral failing, not a reasonable boundary. That script runs deep. It doesn't go away because you learn to read a balance sheet. What changed was the voice note. Not because it was the worst thing that had ever happened to me in this family, it wasn't. Not even close. But because it was the clearest. My mother, in 53 seconds, told me that the moment I stopped giving, I stopped belonging. And I realized I had already known that for years. I had just kept paying to avoid hearing it said out loud. Once it was said out loud, there was nothing left to protect. If any part of this sounds familiar, if you are the one who always answers the phone, always covers the shortfall, always absorbs the consequence, I want to say something to you directly. There is a version of loyalty that looks like love but functions like debt. You keep paying because you believe that eventually the account will balance. But in some relationships, the account is designed to never balance. The more you give, the more is expected, and your generosity becomes the baseline: invisible, unacknowledged, assumed. You are not a financial institution. You are not required to carry unlimited liability for other adults' decisions. Setting a limit is not abandonment. Requiring transparency before you co-sign your name to something is not betrayal. Removing yourself from an arrangement after the terms were changed without your knowledge is not cruelty. The people who tell you otherwise are usually the ones who benefit from you believing that. You are allowed to close the account. You are allowed to do it quietly, in writing, through proper channels, without drama or apology. You are allowed to turn off your phone and finish your work and go to bed, and trust that the consequences belong to the people who made the decisions. The 31 missed calls are not evidence that you did something wrong. They are evidence that the system you held up for years has finally been asked to hold itself up. That is not your fault. That is just what accountability looks like when it finally arrives.